back to us there, guys. So let's deal with the accounting equation. So first of all, we need to know about business and people. So accounting in general is related to businesses and people. Firms and individuals need to plan how they are going to spend their money and what quantity to save. We may write down a plan known as a budget. So a budget is the amount of money that you plan to spend basically, and it's like a strategy that businesses usually you hear terms like don't go for the budget, stay under the budget, we're above the budget. We'll go into what that exactly is. So let's look at recording accounting data. So recording accounting data is an important part of accounting as it is virtually impossible for humans to record all the information needed in their hands. So we have to get accounting data. Without that, we can't really understand where we are when we're doing business. So consequently, systems have to be set up to record um, cash received and paid out and goods bought and sold. By having accounting data, we have an accurate representation of how businesses is going and what exactly we are even doing. So let's look at classifying and summarizing. So this is another part of the accounting equation. So when the data is being recorded, it has to be sorted out so as to be most useful to the business. This is known as classifying and summarizing data. We have to sort the data in order. So if we have data relating to expenses, we have a separate section for that. If we have if you have data relating to what we bought, we will have a separate area for that. You could basically have the gist of it from that. So communicating information. So finally, they should be able to tell or communicate the results to the owners of the business or to others to allow to receive this information. We should be able to communicate our losses, our gains, our profits, and all these other information. We should be able to communicate it after we have summarized collected data. We should be able to understand if we are making a profit or if we are making a drastic loss. So from the data, someone skilled in accounting should be able to tell whether or not the business is performing well financially. They should be able to ascertain the strengths and weaknesses of the business. Should we purchase more of this particular good because the sales is this and this data? That's what communicating information generally is. So let's look at users of account information. So first of all, we have owners. The owners of the business want to be able to see whether or not the business is profitable, is it succeeding. In addition, they want to know what the financial resources of the business are being used for. Are we spending all our money on useless things? Should we spend our money on this product instead of this product in order to make more profit? So the first user of accounting information is obviously the owner of the business. Then we have a prospective buyer. When the owner wants to sell the business, the buyers will want to see the financial accounts of the firm. First of all, they might want to know how much the business costs. Is the business doing? Is the business good? Is it healthy? Is the business in bankruptcy? And all that information they might want to know. So thirdly, we have the bank. So if the owner wants to borrow money from for use in the business, then the bank will need such information. Can they even repay this money that they borrow? The bank will obviously think of that in this case. We have tax inspectors. They need it to be able to calculate the tax payable. So tax inspectors might want to know how much the business is making so that they could undo their taxes. And that depends on the different types of tax systems. There are different types of tax systems. They're progressive, regressive, and all these other things. We'll look at that in the next video. But for now, we'll just take that with a grain of salt. So let's look at a prospective partner. If the owner wants to share ownership with someone else, then it would be partner will grant such information. So if you're partnering with somebody or they're investing in your business, you have a shareholder, they may want to know what the business is doing, is their investment good and stuff like that. They might want to know this basic information. So the last user of the account information is the investors. and people wondering whether or not to invest their money in the business. So they might want to make sure the market is good so that they could use that information to invest so that they could have something in return. Say if they invest 5,000, they may want a 6,000 return. So the investors will use that information in that accord. Now let's take a look at the accounting equation. The whole of the financial accounting is based on the accounting equation. If a firm is to be set up and start trading, then needs the resources to use within the firm assets. These resources can either be supplied by the owner, capital, or by forms from outside the business liabilities. So we have the accounting equation. So basically the accounting equation is as follows. Resources in the business equal resources supplied by the owner plus resources applied by the firms from outside the business. So in summary, it's asset equal capital plus liabilities. So the assets is what business owns. Liabilities is who we owe basically. Liabilities is who owes who we owe, right? So resources is the assets. Resources is what we have, right? So assets equal the resources in the business. Capital equal the amount of resources supplied by the owner. Liability is the amount of money owing the people outside the business for the use. The resource example, the bank for the use of money. So we'll look through some examples. In these cases, asset equal capitals plus liabilities. We'll look through a couple of examples in the video below. So it is a fact that the totals of each side will always be equal to one another, and that they will always be true no matter how many transactions there may be. The actual assets, capital, and liabilities may change, but the total of the assets will always equal to the total amount of capital plus liabilities. So yes, guys, that's about it for this video. See you guys on the next video. Subscribe, hit notification, and see you later. Subscribe to the Saudi Prep Guys business.